Hi, farms. Hope you're all doing well. This is Econoscope, your front row seat to the global economy, where we break down global headlines and explain what they mean for Nigeria and Africa's economy. Wait, did Nigeria really introduce a 25% capital gains tax? Is that why the NGX lost trillions in 1 week? Let's fact check this in a few seconds because a lot of what you've heard is not in the law. The misconception. There's been massive confusion and intense debate. Headlines everywhere say Nigeria introduces 25% CGT. Social media says investors will pay 25% on every gain. But here is the truth. No section of the Gazette version of the brand new tax laws actually states a 25% CGT rate. None of the four tax acts contains a clause stating that CGT is charged at 25%. Instead, the reforms integrate capital gains into income tax computation, not a separate rate. So, where did 25% come from? Here is the twist. Under the new framework, capital gains are no longer taxed with a separate flat rate. They are now taxed under income tax. And what is the top income tax rate for individuals? 25%. That is enshrined in Section 58 of the NTA 2025. So the 25% CGT you heard about is actually just capital gains of individuals taxed under the personal income tax system. So individuals' gain will now be taxed under personal income tax effective 1st January 2026, where the top marginal rate is 25%. What about companies? For companies, it is even more straightforward. Capital gains go into taxable profit and are taxed at the corporate tax rate of 30%. So companies face 30%, not 25%. Companies' gains fall under the corporate income tax regime at 30%. This is enshrined in Section 56B of the NTA 2025. That's Nigerian Tax Act 2025. What are the key changes introduced by the NTA, with respect to chargeable gains and assets? According to Section 33 and 34 of the NTA 2025, all forms of property, whether situated in Nigeria or not, shall be chargeable assets except exempted by the provisions of the Act. Chargeable assets include any currency other than Nigerian currency, any form of property created by the person disposing, all types of property, including shares, options, rights, debts, digital assets, intangible property, and foreign currencies. However, gains from selling shares in Nigerian companies are not taxable if the sale proceeds are less than 150 million naira and the chargeable gain does not exceed 10 million naira within 12 consecutive months. The shares are transferred between approved parties in a regulated securities lending transaction. The proceeds from disposal are reinvested within the same assessment year in shares of Nigerian companies. However, the portion not reinvested will be taxed accordingly. This is where we'll stop. In part two of this video, we'll look at uh, other aspects. Thank you for listening. Follow Econoscope, engage with our content, reshare, and comment. See you in the next video. Bye.